Hello friends, my name is Pinaki and welcome to my channel Fintech Logics. Today we will talk about fraud management in digital lending, specifically how tech is enabling the fraud management in a lending infrastructure and lending framework. So let's begin. So primarily we will discuss about fraud areas. What are the primary fraud areas? How tech is helping in bringing this, some recent tech enhancements, and some front-running companies or products in this space. Now, I have created a lot of videos on digital lending on other aspects. If you have not seen that, I'll provide a link here. Please have a look. Now, let's move to the primary topic of our discussion. So, just to give a recap, this is the simplified version of our digital lending landscape, and we are trying to discuss today fraud checks, how digital lending is helping. So before that, if I give you a little data points, so if you see one in every 164 mortgage applications encounter a fraud. This is given by Core Logic, and this kind of frauds are not limited to any specific type. It can be related to first party, second party, third party, or even loan stacking. So primarily, if you look at, so identity fraud is the topmost category, where somebody is trying to create a synthetic identity and try to forge in the lending process. Second thing is about the account, the bank account, the loan accounts which are given, those are forged, and it becomes very difficult to create a picture of the borrower's trustworthiness by the account. And the third thing is the kind of transactions the borrower is exposed to, because we are not able to get the whole and sole view of the transactions. We get across all these fraudulent cases. Let's go into little depth of each of these items. Now, talking about identity, so primarily how tech is helping. Basically, fraud happens with stolen and synthetic identity. Utilizing data, leveraging the technology, we can get data from multiple sources to create a whole and sole view or identity mapping of the customer, right? So that helps in identity fraud elimination. Second thing is that tech is helping, which is OCR, optical character recognition, for document fraud. So which is regarding different kinds of documents which are provided by customer. Tech is helping to decipher those and help in getting any false documents. Third thing is image matching, which is specifically for video KYC and all. So wherein images from, specifically photographs from different sources, can be matched. So for example, the photograph that is given by selfie and the photograph which is there in your PAN card or Aadhaar card can be matched using technology, AI frameworks especially, and that helps in understanding that if the borrower who is now we are approaching is the actual borrower or not, actual person or not. The next one is about channel checks. So where we using technology, we can aggregate data from different sources. May it be your IP data, which is from Wi-Fi, or your phone number, or your email, or even device using your PIN numbers. It can be matched, consolidated to get any fraudulent behavior of the customer in past. The next point is regarding aggregation of data sources. Now, because our processing time has come down using technology, it is possible that within milliseconds we can search across multiple data sources, like multiple blacklist or multiple different sources, to find out if customer is a genuine customer or not. Channel aggregation. Now, previously it was quite common, the frauds were quite common, where different kinds of channels were used. Now, using technology, the data, the information that is coming from different channels, like your mobile device, or even your web, or even your bank channels, everything can be consolidated, aggregated, and verified that okay, if it is correct or not. The next one is regarding location and legal. So as you have discussed in detail about location, so I will not go into depth, but using your location and legal information deciphering also, lot of analysis can be brought forth within a very less period of time. That gives a very good picture of customers' presence in different places and if there are any fraudulent behaviors. Now let's move to the next one, which is your account. So specifically, bank verification was a problem in a previous time, but now with the help of technology, it can be done using your challenge deposits and all, where a lot of data can be aggregated, can be pulled out from the accounts using API integration, and it can be verified pretty quickly. Cash flow checks. Now a customer has presence in different bank accounts, loan accounts, and even deposits. So it was getting very difficult initial timings to do a manual verification, taking all this data, aggregating, and then finding out a consolidated cash flow. Using technology, that has become a piece of cake these days to get a cash flow. Now statement analyzer and aggregator. So now a customer might give you statements from loan account, your different bank accounts, even possibly share accounts, your demat accounts as well. So all these different statements can be analyzed and consolidated in a pretty efficient and a timely manner, so that a customer's whole and soul financial behavior can be established. Now let's move to last but not the least about the transaction. So this is one of the key areas where there has been a lot of fraudulent cases. Now in the initial timings, we are not able to do the beneficiary checks because though we can collect the data, but establishing information about all these beneficiaries was a problem. Now using tech with multiple integrations, your transactions to different beneficiaries can be checked to help in case of your, it might be for your AML or for cross-border, everything. Transaction consolidation. So a customer might do multiple transactions and it was getting difficult earlier to establish that, okay, are there any smaller value transactions which can be aggregated to get some insight that, okay, customer has sent substantial amount to some dubious party, right? So those kind of consolidations is possible using technology. Interborder exposure, again taking help of different API integrations and open banking. AML checks can be done with multiple blacklist with in a blink of second. Now dubious financing check, if the customer's transactions are there to a party which is blacklisted or something, so in that case dubious financing checks can be done. Black web exposure checks, again using integrations where if the customer has any integration, any exposure in black web. And finally auto compliance checks of the transactions where any of the transactions in the last 3 months, 6 months, 9 months, or even more than that 2 years period is compliant to regulations or not, right? So using technology, all these things have become quite easy, time efficient and accurate, right? So that is what is helping in the overall lending ecosystem in eliminating fraud. Now if you see what are the some of the latest technologies where a lot of enhancements are happening, so I have listed only few. I will not read those, you can just check. So like AIML or your automation of jobs, all these jobs are now become automated, and somebody does not have to trigger a fraud check at each point of your lending system to actually do a fraud check. Your real-time integration and rapid adoption, and even digital footprint analysis of the customer can also be done, leveraging technology's ability to integrate with multiple financial and non-financial systems as well. Like for example, SMEs credit underwriting check, and somebody can go through Google Places to see customers or your SMEs ratings for borrowers, for different customers. Sorry, so this is a piece of non-financial information, but that also helps in checking or getting an overall view of customers' fraudulent behavior. Now let's look at some of the front runners in this area. So if you see, Experian Hunter is a quite well used product. So which is your Hunter is the product name and the company is Experian. Similarly, FICO has a similar offering which is called as FICO Falcon. Now, these in last 2-3 years, specifically from the COVID period, we have seen these three products like your Cian, your Fingerprint, and FedZai are also quite good in terms of providing innovative AI and ML solutions for different kind of fraudulent checks. So this is in a nutshell how our entire digital lending is being benefited by technology, specifically in the area of fraud management. I hope you would have liked this. You like this video. If you need any additional details on this, please leave a comment below, and I will be definitely make a separate video on that. Thanks a lot, viewers.